Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, I have a request. If you're busy doing something, then please watch the video later because this January month has already been a very difficult month to trade. So if you're busy doing something, then watch the video later when you are free because I'll be explaining few things that may sound a little complicated and it will be very difficult for you to concentrate. So watch the video later if you're busy, and if you're free right now, then yeah, you're most welcome to watch. So let's get started. So my dear friends, this is the chart of US dollar index DXY, and as I was saying yesterday, that if DXY fails to go up, then there is a possibility that we may get to see DXY inside the range again. DXY was trading inside the range, we were not getting moves in the market, and we were waiting for a big move. Finally, DXY broke the resistance, DXY went up, but it failed to cross the level of 104, 104.50. Probably you know this level very well, 104, 104.50, because to continue the upside, we need DXY above 104, 104.50. But due to absence of volume, due to absence of buying power, we can see DXY is going down again. And if DXY enters inside the range again, the things will be again very boring. Okay, so the next level on DXY will be 102.90, or you can say 102.9095 is the hope for us. We can expect DXY to bounce. If it fails, the DXY will be going inside the range, and 102.50 will be the next level where we can expect DXY to bounce. So the market opening will be very important, not only for DXY but for gold and other pairs as well. And this was the technical aspect of DXY. Now let's look at the fundamentals, because knowing about the fundamentals is very important. You can see gold rises again as the dollar weakens and yields widen. Gold closed higher on Friday, backed by a lower dollar, even as treasury yields moved higher again. But here the important part is geopolitical worries are also backing the price of the metal. As tensions in the Middle East rise, Israel's war on Hamas and attacks from Iranian-backed militant groups. Now try to understand the whole situation here. We still have the Russia and Ukraine war going on. After that, the conflict on Israel came up. Okay, and it is still going on. And it was mostly centered around Europe. Okay, but you can see right now that after the attack by Iran on Pakistan and Pakistan retaliating, the war is coming to the Asian side. Okay, so it is slowly spreading, and things are not very positive for the geopolitics or for the world. And whenever tensions come up, gold always go up. So if we see any news, any tension in the coming week, obviously that news will be positive for gold, and we will get to see upside on gold again. And right now, if we look at the overall situation, then yes, it is not very positive for people like us, because nobody likes war, nobody likes tension, but it is what it is. So as a trader, you need to stay in touch with the news, because any news, any tension will just gold make fly again. Before I proceed, I have an announcement that Brokers View is conducting an award ceremony for brokers with outstanding performance for Middle East. So if you stay in Dubai, if you stay nearby Dubai, or if you happen to visit Dubai on 31st January, you can visit Hotel Conrad Dubai. It's a very famous hotel, and not only you will be getting free gifts like t-shirts, pens, but you will be able to meet a lot of traders, brokers, and you will be able to expand your horizon. You'll be able to expand your knowledge. And if you're interested with IBs and all, yes, you can also go for networking as well. Okay, so this is the agenda, and if you want to register, okay, it's free of course. Okay, if you want to register, then the link is in the description and the comment section. Feel free to register and uh, enjoy. And this is the weekly chart of gold in front of us. And as I have told multiple times, that if you're a positional trader, then obviously you always need to look for buy positions on gold. Because of limited supply on this planet, gold as a metal will always be bullish. Okay, so as a result, if you are looking for investment purpose, if you're looking for a trade that will run for a couple of months, then obviously you always need to be on the buy side. Forget about resistance. After all, the supply of gold will always be limited on planet Earth. And if you look at the daily chart of gold also, my dear friends, you can see on the daily chart, okay, we do not have any clarity on the technical ground. And to be honest, okay, I'm not getting a proper opportunities here. But if I go to the 4 hours chart, okay, if I go to the 4 hours chart of gold, I can see that on the 4 hours time frame we have a beautiful trend line working as a dynamic support for the market. But yesterday, one of the members from the Pro Trader group pointed out this symmetrical triangle pattern. His name is Haris Iskander, and I can see that yes, we do have a symmetrical triangle pattern. Those who don't know about symmetrical triangle pattern, it's a bilateral pattern, means a breakout is coming very soon. Ascending triangle pattern tells us that yes, we are going to have a breakout towards the upside. Descending triangle tells us about a breakdown towards the downside, but symmetrical triangle pattern tells that only a breakout is coming. There is no guarantee about the direction. And Harris pointed out, and I can see the same thing on the chart. This is the chart of gold in front of us on the 4 hours chart. Look, if I draw a line at the top, so technically I can see that we do have a symmetrical triangle pattern, and yes, there is a possibility that we are going to have a breakout very soon, maybe by next week. Now we are back to our beloved H1 or 1 hour time frame, because most of us are day traders and gold is a beast. As a result, we prefer to stick to 40, 50, 60 pips trades only. But if you are a positional trader, then obviously you always need to be on buy side. It doesn't matter whether you're trading in January, February, March, April, May, June, July, doesn't matter. Always try to look for a buy position only. Okay, even if you're trapped on a buy position, at least you will get an exit, and you can also exit with profit. On the daily chart, we have a confusion. On the 4 hours time frame, we could see that we have a breakout possibility, and on the hourly time frame, H1 time frame, we can see that right now gold is showing good amount of upside, or gold is showing recovery. So you can see that one chart, okay, or one asset, but the asset is having different stories on different time frames. So as a result, my dear friend, knowing your preferred time frame is very important, so that you can trade accordingly. Most of us, okay, know it very well that multiple time frame analysis is very powerful. But yes, multiple time frame analysis is powerful, but sometimes it confuses us if you don't know how to use it. Okay, multiple time frame analysis will help you to understand in which direction the market is moving. Okay, what is going on overall. But when it comes to executing the buy and sell positions, your order, okay, always try to follow your own time frame. So on the H1 time frame, hourly time frame, we saw that gold was in uptrend, then there was a trend reversal, again gold was in uptrend, gold was in downtrend, gold broke the previous low, and now we can see that gold is in uptrend again. And if the geopolitical situation remains the same or something escalates, then obviously we will get to see upside on gold. So if you have a buy on gold, then you can be on the buy position, because things are not heading towards positivity. Okay, I can just say that overall geopolitical situation is not positive. So as a result, further upside on gold is possible right now. But if situation change, then I will be updating you. But right now things are not positive. So if you have a buy, you can be on the trade. And if you're, and to have a complete breakout, okay, to have a complete change of the scenario, we need gold above 2070. Technically speaking, if gold breaks 2070, it will be a clear-cut indication that gold will be moving towards 2100 and finally 2150. And maybe in the coming days or coming months, we will get to see gold heading towards 2200, 2500 as well. After all, gold will be bullish always. But the thing is that we are day traders. We need to we need to react according to the trend of the market. Okay, so yesterday we discussed about two selling opportunities around 2032.20 and 2039.20. These were the two trading opportunities for us, and 2039.20 gave us a precise sell position, but market was extremely bullish around 2032, so as a result it did not work. Okay, but this worked nicely, and I was outside. My sell position was around 2032. Okay, let me show you what happened. See, I had a sell limit at 2032, and when market started going up, I was little bit confused. Okay, what is going on? Market was so automatic. Suddenly, market became very bullish. Okay, so I started taking sell positions, and you can see that over total I executed 4 sell positions, out of which in 3 I made profit, and one sell position, okay, I could not make profit. It was in loss, but somehow, okay, I ended up in profit because honestly I'm not a fan of layering or averaging, but in some cases, okay, we can do that. But 2039 did pretty well, so hopefully you ended up in profit as well. And as I was outside, when this thing happened, when I exited, okay, and I removed my sell limit at 2039 because I was little bit scared. So as I said, the market opening will be very, very important. Okay, so if you see that right after the market opening, goal is going down, then observe the market around 2020.70, or you can say 2020. Observe the market around this particular level of the market. Usually we don't get to see much volatility during the first half, so if market behaves like a typical Monday market, you can expect buying around this area. Okay, I do not have any buy limit as of now. Maybe I will be placing buy limit once the market opens, because the market opening will be very, very important. And on the other hand, if you see that right after the market opening, goal is showing red candles, then you need to avoid any sort of buying around 2020, and you need to wait for 2016. 2016 is the next support on the chart of gold, and let me explain why. Okay, so here we are using normal price action as well as Fibo here. So we can see, my dear friend, that market bounced from Fibo 38.2% retracement level, which was also the previous resistance. So price action and Fibo combination is working. So the next support will be around 2020, as I said, 2020, 2020.70, because you can see this was the level from where market bounced previously, and Fibo 50% retracement level. And 2016, because this was the level which worked as resistance, minor resistance, won't call it a good one, but still Fibo 61.8 is a strong level. So if we combine all the factors, so we can expect that if market behaves like a typical Monday market, these levels will be able to provide a good amount of support to buyers, and we can expect the market to bounce from here. Okay, and as a day trader, you can look for 40 to 50 pips around this area. And if you are already holding a buy position, you can be on the trade. You don't need to worry, because as I said, if we look at the present geopolitical situation, then yes, gold seems to be bullish right now. But overall, over this month was kinda confusing, very much confusing. It was a tough month to trade, because for the first 15 days market was totally dull, and after the market was so volatile, okay, it has become very difficult for us in which direction, okay, we should be going. And the next selling opportunity will be around 2050. Okay, around 2050 we have the next big selling opportunity, where you can expect a trade of 70 to 80 pips, because 2050, probably you guys remember that 2050 was acting as a very strong support for the market. So the same support will be working as resistance. Along with that, we also have the Fibo 78.6% retracement level, means the retail traders will also be executing their positions worldwide. So as a result, 2050 or around 2050, we can expect a sell position as a day trader. Okay, if you're a swing trader, this is not the level, okay, where you should be following taking a sell position. So if you're a swing trader, if your positions last for a couple of days, you should be following the current trend of the market. And right now, fundamentals are pushing gold towards the upside. Okay. So if gold goes down right after the market opening, you can look for buy around 2020.70, 2016 levels. And if you already have a buy, you can be on the trade. No need to exit. Okay. And if you see market is going up, and if you are a risky trader, okay, if you have the risk appetite, if you're a daredevil kind of a trader, then you can look for a sell around 2039 again. Okay. If you're a scalper, you can look for 2039 again. It depends on you, but I will not recommend to everyone, because if you're a beginner, new trader, okay, then you should not be doing this. Okay. And if market breaks 2039, listen to me carefully, if market breaks 2039, you can consider it as a breakout, and you can also look for a buy as well. But keep in mind, we need a momentum candle. Momentum candle means we need a big green candle at 2039, because a momentum candle signifies the presence of volume. So if we see a momentum candle at 2039, we can look for a buy as well. But on the first half of Monday, usually there is not much volatility and volume. So as a result, it may fail. That's why I said the scalpers can look for a sell. But if you see that during the second half or during the US session, market is going up, in that case, look for a breakout. And already I said that if market breaks 2050, then obviously market will be going up. See, whenever the market goes up and whenever you take a sell, it doesn't mean that market is going for a trend reversal. As a day trader, you are just using the opportunity, okay, at the retracement. Okay, so you can just say that if market reverses from 2015, it will just be a retracement, and after that, when market is going up again, it will break 2015. And obviously, okay, you can make money only by taking a buy position. So right now, overall, things are not very clear, things are pretty confusing. So as a result, okay, you need to stick to your own trading style. Okay, so if you are a positional trader, if you are a swing trader, try to look for buy position, stay on the buy position only until and unless you get a news. Things have been a little bit scarier because market has been changing directions, market has been changing trend very frequently for the last couple of days. So as a result, risk management will be very, very important. And as a day trader, try to stick to the levels. Try to stick to level trading only. That seems to be much safer right now. Okay, and if you're a beginner, I can guess that you are confused. I'm extremely sorry. Market is confusing, so am I. But yes, day traders also, okay, you can look for buy at retracement if market shows some dip around these two areas. And if market goes up, if the volatility is not very high, and if you are a risk taker, you can look for 2030 selling, 2039 selling as well. But personally, I will not go for it. I do not want adrenaline rush. Okay, if market breaks 2039, 2040, we can consider it as a breakout, and we can look for a buy as well. And day traders, you can look for a temporary sell around 2050, because we can expect sellers will try to push the market down. At least once we can expect a sell. But if the same market situation remains, if the same market sentiment remains, in the long run, gold will be going up, gold will be breaking 2050 as well, and we can be on the buy side because gold will be marching towards 2100, 2150. I can see the video has become very long. I am extremely sorry. Bye bye, take care, have a lovely weekend.